Hi everyone, good morning and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Tuesday the 28th of January. First of all, please make sure that you remember that this video is for informational purposes only. Please do read the disclaimer that's at the bottom of our website on the morning report page. I've actually had some interesting moves again overnight. Certainly the downside that we've seen in the S&P 500 on Wall Street again pushing lower. That actually wasn't followed through into Asian trading. A bit of support was actually found in the Asian markets. The Nikkei was slightly higher after dollar yen found a bit of support yesterday. Overnight. The moves have come with emerging markets have been the main butt of the selling in recent days, and certainly the potential for the Turkish central bank, for example, to come in and help support the lira has helped sentiment there, and also the fact that the China Credit Trust Bank has also been saved from defaulting as well. A deal has been made there, and that has helped to prevent any sort of contagion spreading through the Chinese shadow banking sector. So that has certainly helped the risk overnight, and there's been a bit of support, and that comes just on the day that the FOMC begins its two-day meeting, which everyone is so concerned about. Obviously, the market is still believing that there's going to be another 10 billion of asset purchases reduced in the month to go to 65 billion. But that also is the uncertainty that has helped drag the markets lower, and certainly in recent days there's been a fairly precipitous sell-off that we've seen in certain stock markets anyway. But today certainly that has pulled back to my chart of the day, which I'm looking at the S&P 500. Look at this chart, it's right back to that big long-term uptrend that dates back to November 2012. You've got that in place, used on numerous occasions, and that is right back on that uptrend, and that is a key level, I think, on this chart. You've also back to this key breakout support, which was tested at around 1775. That was tested in December, and that has come back to there to find support again. Also, this 89-day moving average, which has tended throughout this uptrend to be a good basis of support and gauge for the uptrend, and that has also come in around 1774. So, lots of reasons why this is now a pivotal time for the S&P 500. Investors have got to work out whether they want to continue to sell this one off. If it does go, then this could be a fairly significant change of tack in the longer term for the S&P 500. Momentum indicators, I mean, this MACD is still in bullish configuration. It's just still corrective. It's above this zero line, and just returning towards that. The RSI coming back towards a level of where these corrections have found support. So this could be, if it can build some support from here, this could be a nice actual buying opportunity on the S&P 500, and this is quite an important time for that. Looking at moving in towards the intraday chart, we'll see that it held this low 1768 that we'd seen, and held that low, and is now beginning to think about retracing that. The first retracement you'd be looking for is the 38.2 Fibonacci, which is at 1801, and that is the level that you'd be thinking about as the first line of resistance. The intraday technicals are still oversold. Look at this MACD stretched to the downside, and certainly that could have some unwinding. So there could well be a retracement potentially coming through on the S&P 500 if it can start to find support at these key longer term support levels and begin to push higher again. Things that could happen today that could derail that, certainly the US data this afternoon coming through with you've got durable goods at 1:30, and also consumer confidence at 3 o'clock. Obviously, the FOMC starts its meeting, but also you've got the State of the Union address by the President Obama this evening, which could also have an impact on trading as well. So we watch out for that. First of all, at 9:30, we've got UK GDP, which tends to not really have too much of an impact on the S&P 500, but it could certainly change the mood in the States if UK growth comes in above the 0.7% expectation, which is certainly possible given that the UK data recently has been so positive. Anyway, check out the other charts on our morning report page for euro, dollar, cable, dollar, yen, and also gold. And I wish you good luck in your trading for today.